a bit of a quiz and a test here to put you on a hot seat.
So that's the good thing about being an entrepreneur in 40s. You
like the fact that you make this entire ageism thing about 40 stuff up. Look, the age helps and the gray hair helps. Perhaps in your case.
In my case, no hair.
Ram, I think it'd be a great idea to begin with the beginning. If one talks about CredAble, there are varying kind of names that come to the fore. Supply chain financing platforms, partnering with SMEs, MSMEs, embedded finance. If we were to do some first principles thinking really here, how would you really define yourself? What would that really be? And please don't use the word seamless technology, providing great customer experience, democratizing finance, and partnering with banks to provide all of that. Let's begin with a bit of a quiz and a test here to put you on a hot seat if you were to define yourself without using these adjectives.
Right. So, for CredAble, I think we have a very simple way that we position ourselves, and that is think working capital, think CredAble, right? So if you look at CredAble's business model, it is, razor sharp focus to do anything and everything with working capital. And therefore, if anybody does think of a requirement of working capital, whether that is through, for SMEs, whether it is for large enterprise clients, whether it's for financial institutions, CredAble would be the first name that they'd come to. So, so the messaging is very clear from our end that if anybody does think about working capital, they should come to CredAble. So there is no, so we've tried to keep the ambiguity away in terms of saying that we are embedded finance or we are anything else. We are very simply put, tech first working capital player.
But tell me one thing, Ram, I mean, ultimately you are an NBFC, right? Providing capital requirements, meeting the capital requirements of different companies. You might have a sweet spot in your clientele. Essentially, who are you targeting? But the raw material for NBFCs really is capital, right? The need of capital from time to time, which is why this imperative for fundraise keeps coming every sort of 3 months or 6 months or yearly, right? So how are you managing some of those issues? Because one of the biggest challenges for NBFCs in this country really is that refinancing is perhaps not possible. So the raw material really is capital and the need to raise capital all the time. So how are you sort of managing that and how are you on that front?
Right. So, just to clarify, we are not only an NBFC. Yes, we do have a subsidiary company, which is a NBFC. So, okay. Just to give you a heads up in terms of our target segment, let me break it down the way we've categorized it, which is essentially into 3 large buckets. We have what you call enterprise clients, which are your large conglomerates to your emerging corporates. You have your financial institutions, which is your banks as well as your NBFCs. And thirdly, you have the SMEs, right? Now, so if you look at it, last year in FY23, we disbursed 26,000 crores in CredAble, of which only 1,300 crores was from our NBFC. So the percentage of working capital disbursement that we do from our own balance sheet is less than 5% of the entire throughput that we do as a company as a whole. And that is because we are very highly focused on technology, right? So just to give you a sense, what we essentially do is for our enterprise clients, what we've gone and done is build a bunch of tech platforms that integrate into the ERP of the large enterprise clients on one side, integrates into the core banking system of the financial institutions. And then what we do is we enable working capital for the enterprise's ecosystem of dealer, distributors, vendors, sub-vendors, right? And that is done 100% by third-party capital, not to do with our own balance sheet. What we essentially do is, because we've been able to acquire so many SMEs through the ecosystem route, we use our own balance sheet to cross-sell into that borrower base, right? Which is the value add that we add for the borrowers on our enterprise platform. thirdly, what we essentially do is we license our entire tech stack to financial institutions such as banks and NBFCs. So they can use the tech stack to enable working capital for their clients. And that's why when you holistically look at the way CredAble has been built up, what we've essentially gone and done over the last 6 years is essentially plugged in pipes or railroads wherever working capital resides. And we're trying to become the entire nervous system, so to speak, for working capital. But to answer your question, of the total throughput or disbursement that we did last year, less than 5% was from our own balance sheet. Now, as you are growing your balance sheet, it does become necessary for you to go and raise capital.
Sure.
The way we predominantly look at raising, getting liquidity is through first is through securitization. So, we were India's first company to securitize short-term working capital loans. Then obviously you have on-book debt, which you raise from third-party capital. And lastly, you go and look to raise equity when you cannot lever your balance sheet further. Because equity is the most expensive source of raising capital or creating liquidity in the system.
So how are you on the fundraising right now? You're planning a future fundraise anytime in the future, the next 18 to 24 months?
We raised a last round in September of last year. We will at some point go out to the market, but it is not. So the great part is we're not sitting in like a typical startup where you're running out of runway or you need to go and raise capital to survive, right? So we're not in that situation. We are a profitable business, so we do not need to go and raise. So we're not in a desperate state to raise capital unless it comes at the right terms.
You also said that you're not in desperate race to raise capital because of the fact that you're already profitable. I just want to understand more about sort of how you're making money. So basically there are three parts to the business, right? So one is the intermediary part, where you have SMEs on one side and the third-party capital suppliers on the other. The second is outsourcing of your tech substack to financial institutions. And third is the NBFC, where you use your own prop capital to sort of invest into other companies, right? Amongst all these three parts, which really is the largest revenue contributor till now?
So about 60% does come from our own balance sheet, but 40% does come through tech fees, right? Because the idea behind the tech is that every time a rupee flows through the platform, you make money out of it. So the tech fee is a large contributor towards our revenue base.
So I have to sort of ask you this, since you said about the tech fees. We are in the world where artificial intelligence is revolutionizing the way we work, the way we speak, the way content is generated, the way we pleasure, the way we sort of do literally everything, right? I mean, there's a famous quote that besides the job of the barber, everything is going to sort of get automated. I want to understand that given a fintech company like yours, if you want to sort of really box yourself as a fintech, that is, which really has this kind of tech first approach, how really are you using artificial intelligence as part of your day-to-day job?
So to be honest with you, we don't use artificial intelligence a great lot. We do use a lot of machine learning and the algorithms that are built into the platform so that they can actually enable you to do things better. I think the way we look at technology is more of an enabler as opposed to anything else. And therefore, if you look at it, for we disbursed 26,000 crores. We don't have a large operations team. We do not have a large, we don't have a collection team, to be honest with you, because all of this is actually done through tech, and that's how robust it is. And the reality is, since the last 6 years we've been in existence, we've had 0 NPAs. So and that is the relevance of technology from our aspect. But to answer, I mean, artificial intelligence, at least currently, is not widely used. It's more machine learning than artificial intelligence per se.
That is a great segue to my next question. You mentioned that, Shrija, we don't really have a large collection team.
We don't have a collection team.
This is like, so not even large, you don't really have a collection team.
No, not a single person.
Zero NPA. So I really wanted to understand what is it that CredAble does, which a large, formidable banking institution, which is on the ground, is not being able to do. Because we've had a history in our country with banks sitting on high NPAs. Of course, I'm talking about maybe public service sector institutions largely, but there are some private sectors which have a great run at that way, like HDFC and all, with kind of sort of zero NPA on the retail side. I really want to understand that what is it that an upstart FinTech can get, which this large, formidable institution not being able to get, especially when it comes to NPA?
Right. So again, I would break this question into two parts. One is on our enterprise platform, where we essentially play the role of a tech provider. So we do not have any recourse over there. Having said that, the kind of anchor clients that we work with are, very large companies, right? And therefore, the call is, will such a large company go under? And because you're actually in working capital, you get a lot of early warning signals, right? So if there is a delayed payment, you understand, okay, there's stress in the system. So there are a lot of aspects that, because you're dealing with working capital, there are a lot of early warning signals that you can actually get from an industry, right? But to answer your question on the first part, we are a tech enabler, and we do not have a credit risk on that side of things. On our own balance sheet, we are again, we're very conservative in the way we underwrite credit. We essentially do not deal with the dealer distributor side of an anchor. We deal more with the vendors, and therefore the call again is, as long as a vendor has provided goods and services to an anchor, will the anchor make payments to the vendor? And that is the kind of underwriting that we've been able to do, both from a pre-shipment as well as a post-shipment point of view. So even if you look at it, right, on the pre-shipment side, you can enable milestone-based financing, but be as secured as doing a post-invoice financing. And that's where technology comes into play, right? So for example, if you have a logistics service provider to a large enterprise, and he moved goods from point A to point B, as long as you can verify that the goods have reached point B, you do know that the enterprise will pay for that services that have been rendered, right? And then you can actually pay your truck logistics guy pretty much on a trip-by-trip basis. And you do not have to wait for him to submit an invoice, which is nothing but a collation of these proof of deliveries.
Understood. So you basically predict the steady revenue stream and how predictable that is. And then you perhaps sort of lend the money against that, or perhaps get them to meet the third-party capital, right?
No, we don't predict. We establish that certain events have taken place which would lead to a payment to the borrower.
Okay.
Right? That's where technology comes into play.
So that also means that you are...
Goods have reached point B.
Yes. So that also means that, like you said, that you are conservative in terms of whom you sort of lend it out to, or whom you sort of get to the fore. So you also said that you're also very conservative, because ultimately you have to maintain that zero NPA record. So there might be temptations to disperse more. And you might be also having situations to having said no to a lot of companies, which perhaps do not necessarily meet your criteria, right? Like you would not lend to a scrappy upstart just burning money through the roof, right?
Yes. No, so
yeah.
So that's the good thing about being an entrepreneur in his 40s. You're not a 26-year-old or a 23-year-old trying to figure things out.
Yeah.
We made mistakes in the past. You learn from that, and you try and ensure you don't do it again. But there are a lot of temptation, and that's one of the things that we always think about, right? Because you're sitting in an industry where opportunities come dime a dozen, and it's so easy to get lost within that. But I think, we've been mature enough. I think the team that we built around us, which has been the most heartening that we've gone through. Even when we make mistakes, I think we're very quick to undo those mistakes and not be egoistic and say, no, we will go the whole hog and figure life out. I think
no point dwelling on the mistake. But I like the fact that you make this entire ageism thing about above 40 startups look very cool. That we come on, Shrija, we are like 40 plus. They've made those mistakes in previous life, and now of course the bar is higher. So I think we spoke about AI. We understood about your business model. What really are your expansion plans, Ram? If you were to give me like 3 big milestones that you would be working on. I mean, this country has an ambition to become a 5 trillion economy by 2025. And of course, that growth will also mirror in the growth of companies like yours. So if you were to give me like 3 milestones that you're working on, what would that really be?
Right. So I think the milestones are based on our statement, which is essentially think working capital, think CredAble, not only for India, but the globe, right? So like you rightly said, India is growing and will continue to grow, and therefore the working capital demand will only increase and the gap will only increase. So there's, the way we are looking to grow is, keep innovating in terms of the kind of working capital products that we are bringing out to the market. So which will better suit the requirement of the borrowers and hence create more stickiness. And I think the second aspect is that we are looking to expand beyond India as well. We already have a Singapore office to cater to the ASEAN and the Middle East markets. And that is just a stepping stone to the entire globe out there. But our focus going forward will always remain on working capital. But anything and everything to do with working capital is what we will explore.
So you would not deviate from the working capital focus ever. I mean, that really would be. You think these are the common mistakes, perhaps, which a lot of other financial institutions, NBFCs, sort of really do? I mean, like if you speak to other entrepreneurs, all of them sort of sound so similar. That we have this great technology, we have on customer experience, we partner with banks, financial institutions. What do you think are the common mistakes that some of these people do? That like you have the zero NPA record, right? What are the common sort of stumbling blocks if one can really sort of fumble?
So I think the risk for any founder, frankly, is a lot to do with oneself, right? I mean, like I mentioned to you, one of the most challenging things that happens is there's so many opportunities come through that how do you say no, right? And how do you stick to your guns and say, okay, no, this is, our focus is this and we should not deviate away from this. So I think that's one key aspect. The second one is, like I mentioned to you, I think everybody makes mistakes, right? I mean, it's not uncommon, but how quickly do you learn and how quickly do you get out of it, right? I've spoken to so many people who believe so strongly in something that even it's not making sense for a reasonably long amount of time, but people do get egoistic to a large degree and continue to do what they're doing and not deviate from that. I think what we've also learned is if something's not working out, it's okay to unwind
Pull the
things.
plug on it. Yeah.
Yeah, absolutely.
Rather than just sort of defending and extending the problem.
Yeah. So I think those are the 2 big things that we've at least try and very quickly focus on every time we do something.
And the age helps and the gray hair helps. Perhaps in your case.
In my case, no hair.
Let me give a pass on the gray hair here. Okay. I think it's the conversation been very free flowing and I like the way sort of we are going. But I have to also ask you that this interesting partnership that you have with Axis Bank, one would just like to understand more about that. Is it like confidence capital being put in? Is it like an equity partnership? Or how do banks and fintechs really partner? Is it more like a frenemy relationship, friend kind of enemy? Or what kind of relationship can we really have with banks, companies like yours?
No, so, we've been, since day one, we've always advocated that banks are not our enemies. Banks are our friends, and that's the reality. We cannot do without banks. There was a time about a couple of years ago where they were talking about banks versus fintechs. I think that is not true. And case in point has been, our relationship with Axis Bank, which is brilliant because we started off as, a partnership in a certain business segment that progressed to greater levels and eventually led to a equity investment. So, and it was a great, validation from a market participant into what we are trying to do as a business. So banks are not our, banks and CredAble are thickly tied in together. A large part of our segment is driven by banks and other financial institutions. So there are our partners and will continue to be.
So basically, this narrative about banks versus fintechs, you think it's about time that we abort that narrative and perhaps it's a more partnership narrative that will sort of shape the future. Are you saying that?
It is, yes. And that is evident over the last couple of years by you're seeing a lot more fintech bank partnerships that are being announced in various pockets, right? And it's working well. And I do not see that changing going forward either.
So Ram, you also have a significant amount of VC funding on board. And you also said that there will be a market hit rate. I mean, like you will sort of go to the market at what, maybe 24 months down the line since you had the last fundraise September from Plutus and other people. So what do you think as a founder and the management team or the VC's conversation is in terms of the exit? Is a strategic sale since you have access on board, or is it like more an IPO? I mean, what is the sort of the future for a company like CredAble or fintechs in this category?
So, to be honest with you, that's not what we are focused on. I think we as founders are trying to build a business that has exceedingly strong foundations and can be tested with time, good times and the bad times. I think if we do that, we will create shareholder value irrespective of whatever exit outcome that may be. So we don't think about how we're going to exit. I think our focus has purely been on how to build a very strong business with a very solid foundation. And if you do that, you will create shareholder value.
Okay, so you completely dodged the question, but I think we will sort of move to the next one then. And I want to understand that if you were to give me the biggest fad in finance right now in the fintech space, what would that really be? Something which you're seeing is really coming in, but looks more like a hype than reality to you. What would that really be?
So, I can speak from the lending business, right, per se, because I'm into that. I think, and this is what I keep telling everybody, I think it's very easy to lend, give money, and to build a very fast book. It is very difficult to then collect. So I think the point being is not how quickly you lend, how quickly you build your book. I think it is, and I think you have a lot of products and products that have come over the last year, where they've created very interesting products, but then again they were hit with very massive NPAs. I think BNPL was one such product. So I think so I think from my point of view, it's stuff like that where it's very easy to create a large market and to build and to lend money. I think you should also think about how easy it is to collect and get your money back.
But Ram, I must credit you that if you have dispersed 23,000 crores in zero NPA, I mean, that is really something. Even formidable institutions like NBFCs, and we have seen like how the books can really go where. So how will you resist that temptation of not growing a book very fast and really saying no to people? I mean, what is internal thinking like?
I mean, know your limits. I mean, you have, when you started your business, you put in certain foundations and you put in certain guardrails. Try and avoid going beyond that. And you keep sticking to that. Now you keep evolving the business as you go forward. But I think the basics, and if you do your basics correctly, I don't see the reason why you should end up on the wrong side. You'll
Okay.
always have hiccups, but you learn to deal with that.
So how big is the prop book right now on the NBFC side?
So we're touching about 500 crores on the book.
Still small. Is it an ambition to sort of make it larger? Like how big would that be? Because if you talk to private equity fund managers, the question I'll ask to them is like, how big will the AUM be by this year? I mean, everybody sort of really talks in that numerology. So what sort of really is your ambition there from the prop book end?
All right. So I think we look at it. So the way we look at it is, what percentage of our book is driven as a part of the overall AUM that we manage, right? So today you disburse 26, but you'll be managing about 5,000 crores worth of AUM. We are a small part of that. And if you keep the ratio going, you will automatically, increase your book size. This year, we're looking to, disburse roughly around 45,000 crores.
Wow.
So if you keep the same ratio in place, I think, it's an automatic increase to our own balance sheet.
Okay. In terms of your revenues, how does that look like for this year?
So, we've grown 4x since the previous year. We're still closing out our numbers, but so we've grown about 4x since FY22, more or less.
Okay, so what keeps Ram Kewalramani awake in the night from CredAble perspective? That this is the mistake perhaps we could do. I mean, from what all we have discussed till now, it looks like the trajectory is very high, sort of positive looking what up, but there's a questions from the founder's mind, right? Which keeps you awake, and the challenge, the imminent challenge, what would that really be?
I think, biggest thing is, are we losing focus? Are we still out to do what we started out to do? Like I mentioned to you, you keep experimenting and try to innovate to ensure that we don't go overboard by doing basically just avoid going mad, essentially, because it's very easy to go crazy in a startup.
It is. And I also want to understand from you on this entire BNPL narrative, which you sort of very rightly pointed out. There are a lot of fintechs and companies looking at the affordability space. For instance, there's PayU, there's Pine Labs, and there's sort of many other companies which are really, really targeting. But don't you think that for us journalists, which have really been saying that BNPL is nothing but really the rehash or a great marketing pitch saying that credit card is back, but in a different language. It's some great marketing guy who's thought about this new language called BNPL, and it's really being given to other people. So what really will be advice to this, to these large companies or fintechs really sort of focusing and doubling their headcount, especially on the BNPL side?
No, so listen, everybody has different genetics. Our genetics was not to go down that route, purely because one way or the other, it was unsecured loans that were going through. And the question that we couldn't ask ourselves is, where is the money going to come from back? So I think, and I'm sure the others have tried to are figuring it out. You'll have, in every industry, every sub-segment, you'll have a couple that don't do well, but you'll have, a lot of them who will do it correctly. And I think the idea is to follow the guys who are doing it correctly. And I'm sure there are a lot of people who are doing it correctly.
Ram, you already have a 5 years runway now with CredAble.
Yes.
If somebody were to start up a fintech company in 2023, is it easier or is it going to be more difficult right now against the context of AI or compliance? Is AI more of a nuisance than comfort? What is your thinking?
See, I think for people who are going to try and build a startup in 2023, like CredAble, I think it is more challenging. You have to really innovate oneself, I think, because you already have a couple of players within the segment who are trying to innovate constantly. I think there'll have to be something that's completely different, that comes different, right, from a thought process point of view. I think technology and its tools are great to be used as long as they are used correctly. So whether it's AI, whether it's ML, using data to actually do your business better or to cross sell better. I think everything done within the realms of your jurisdiction should be is absolutely a good thing.
Okay. And what really is the sticking point with the VCs during the board meetings, really, where the confrontation happens? You think there are temptations to put you on a pedestal, things which you don't necessarily want to do. That's what VCs are famous for, by the way.
No. I think we've been very blessed with the investors that we have. So I think it's been a great relationship from our investor point of view. But I think more importantly, I think if you're mature enough and you raise your hand, say, "Yeah, we tried this, it did go wrong, but this is what's gone right." I think if you approach it that way, I don't think there'll be any confrontations out there. As long as you're honest with your board members, true to yourself and true to the company, I think you'll be fine. I think, you had case in points where, there have been stories where VC put a lot of pressure on growth, and therefore, young founders get, they get carried away and they cook their books. That's a problem. And I think, every business goes through ups and downs. So I think as long as everybody understands that, you'll be fine.
You're not a big fan of young founders, the 20, 25-year-old scrappy
No,
upstart.
I have nothing to do with that. I used to be one myself. No, it's just, I'm saying, there have been, I think maturity comes with age. So it's nothing to do with age per se. I think it's more maturity levels than anything else. I think that's where I was coming from.
So Ram, I have to ask you this, that do you really think that FinTech is, talking from a technology perspective, is a winner takes all market? Because if you see the offline world, I mean, there's so many banks. This country has just so many banks, and it's still sort of said that it's so underserved in terms of credit requirements. So from the technology perspective, do you think that FinTech can ever be like a winner takes all market? What we have seen, especially in e-commerce, for instance, the number one, number two players are the biggest, right?
Yeah, no, there is, I don't say, I think such a large market that there is no winners take all. And that's a great part about it. I think, even though you have so many financial institutions trying to, disburse ample amount of capital, it's still, we as a country are severely underserved on the credit side. So I think there's a long, long way to go, and there is no winner stakeholder for sure.
I can't let you go without asking you this, that I was in London for my fellowship, and I must tell you that UPI is the cynosure of all eyes in the world, and people really look up to us as to sort of what we have done with it. But when I stint there, I want to understand that you also see a lot of these digital banking upstarts, right, which have done phenomenal, especially in England and the UK part of the world. This entire digital banking and neo banking, and we see a lot of that narrative also building in India. How much of that you think will be a reality? How much of that you think is more noise and signaling happening? What is sort of your sense there?
No, I think digitally, from a digital infrastructure point of view, I think, India is far ahead than majority of the world out there. I think, like you mentioned, UPI has been a fantastic play, but it's not only UPI, it's the other initiatives that are actually coming through, which are creating the digital infrastructure so that you can actually enable capital to the underserved and to get them into the credit market. I think India has a fabulous scope purely because of the kind of, tech stack that we are building. And that is only going to help India going forward. So I think a lot of the things that you hear is fabulous, and we are very excited with what the future will hold.
Like, would you see like a Revolut kind of company coming from India, like a complete digital bank based around social media? I mean, can we sort of see that happening here?
So you've seen that in the past, even in India, where credit models were built around, say, Facebook, hypothetically, right? At some point, I mean, a lot of them tried, a lot of them failed. for obvious reasons. I think you'll have to slightly, you'll have to modify your business plan a little bit when it comes specifically for India, because India is a different market, and our behavior patterns are slightly more different than say the Western parts. So I think you should see a lot of people coming into India because it's a very exciting market. But I think they should modify, their plans a little bit. So because India is not like the rest of the world in any market, right? I mean,
what really is different? One is the language one can understand, but we also have millennials who are financially smart up and getting like this a significant disposable income, right?
Yeah, no, you have behavioral patterns which are different. When you come into the urban areas, when you go into tier 2, tier 3 areas, I mean, India is such a vast country with such a spread out population that literally every city is a different market, if you want to really look at it, right? Or every state is a different market. And that's the beauty about it. So, and that's the exciting part of it.
I have like 5 minutes left with you before you get on to another call, but I can't let you go without asking these two fun questions. The highest point and the lowest point in your career or your entrepreneurial journey till now, what would that really be?
Highest point is CredAble. So that's a given. I think I haven't, I think lowest point.
Come on, Ram, you can be mature enough to say this.
No, during the previous stint, we did, the business did go through a bit of a downturn.
Okay.
At that point in time, we had to, downsize the team a bit. So I think that was painful to do. But again, something that you had to do so that the business survives, which it did.
Which FinTech company besides yours, which you admire the most?
I think Zero-NPA is a fabulous play.
Okay. And my last question is that if you were to be stuck in the elevator with Madam Finance Minister, what would be your 2-minute elevator pitch to her be?
Think working capital, think CredAble.
Wouldn't you take the opportunity to talk to her about compliance, what NBFCs, or anything like that? Nothing.
No, I mean, there's a lot of, I think, listen, while we're doing great in a lot of aspects, KYC and all those other aspects, I think we can do a lot more, which is still work in progress. I think where we were 5 years back to where we are today, it's a remarkable improvement, and that's continuing. So I think the intentions are correct. It's so far so good. Thank you so much for having me.
Thank you so much. Take care.
Bye.
Bye-bye.